Hi guys, for today's trade of the day, we'll be looking at the pound CAD. Now, the reason why we chose the pound CAD is basically because for later part of today, we have quite a number of important and high impact CAD news coming out, and the day after we will have news coming out from with regards to the pound. So pound CAD should be one of the pairs that we will probably see quite a number of movements over the next 2 days. So now for this pairs with all other pairs, what we like to do is really to start off with a top-down approach. What that means is that we start off with the monthly and then we work our way down to the weekly, the daily, the 4 hour, and possibly even the 1 hour to look for trading strategies. And on each time frame, we will actually find the corresponding support and resistance levels. So here we have it, the pound CAD on a monthly. What we want to do is we want to focus on the current prices. Now, in technical analysis, it's important to know what went on in the past. However, it is the current prices that would tell us and give us a hint as to whether prices will go higher or whether prices will go lower. Now, with that, let us start. So on the monthly, graphically, I can see that we have sort of a graphical support level here. All right, we can call this a long-term support level. So graphically, we have a long-term support where price held above this level very strongly, and then price came back to test it sometime in 2016, and we can expect price to come back and test it should price go lower. And we want to confirm this long-term graphical support level. Of course, it's historical low, firstly. Secondly, because price made sort of a push down from here before moving sideways, we want to see how far price can go down and whether there are any key Fibonacci extension levels on that way down. So we take the first point here for Fibonacci extension to the swing low and back to the swing high here. And we see that the Fibonacci extension level that price goes to is actually at the 61.8 extension. This falls in line with our long-term support, so we can keep that level there. As for resistance, long-term resistance, I see one level here where price actually tested. If I were to extend it further back, price actually tested once, right? Once, twice, broke below, came back and tested it the third time on the other side. So it was a support turn resistance. So with that, I can put this as my long-term resistance. Now, we can take a Fibonacci retracement from the swing high here to the swing low, and we see that this long-term resistance falls nicely at the 50%. So with that, let's just select the 50%. Now that we have our long-term resistance and long-term support, let's go down to the weekly. So give me a moment as I tidy this up. So we have the long-term support level and the long-term resistance level. And since June 2016, price has sort of been in a sideways motion, right? So it's sort of ranging sideways. But having said that, we want to once again focus on the more current prices. Over here, we see that price made a zigzag push down before retracing backwards. And price is actually closer to long-term resistance than the long-term support. Graphically speaking, we can see some sort of a weekly support level here, right? Because if I were to extend it further back, you can see that price actually tested it once, twice, second, and a third time. So with that, we call this our weekly support. Now that we've got our weekly support, we want to look for our weekly resistance. Graphically speaking, there's sort of a resistance here. Where price tested once, tested and rejected a second time, tested, went above, but failed to close above this resistance level a third time, and one more recently, fourth time. So this can be quite a strong weekly resistance as well. With that, we want to confirm this with a Fibonacci ratio. We take a retracement from this swing high here to the swing low. We open up all Fibonacci ratios. And we see that this weekly resistance falls in line with the 7640 retracement. Right, so now that we have a nice weekly resistance, weekly support, long-term resistance, we see that because price is closer to the weekly resistance, what I think is price would actually make a limited push up to the weekly resistance before a further drop down to the weekly support. Now, price is not going to drop in a straight manner, but rather what the markets normally do is they actually go down in a zigzag manner, right? So remember, we have this bearish bias on the weekly. With that, let's go down to the daily. Once again, let me just tidy up the charts. I can ignore the long-term support because it's really far away. I'll remove this Fibonacci ratio as well. I just tidy this up so it makes it more digestible and presentable. The weekly resistance, I can leave it there, but I'll just like to move it forward here. Let me tidy this ratios up. Okay, so now that we have our long-term resistance, our weekly resistance, weekly support, which is close to this graphical swing low here. Okay, is close to this graphical swing low. On the daily, what we want to do is find the daily resistance and the daily support. So we see that price actually made sort of a huge V shape push down before a push up, and it seems to be making a retracement backwards. So there are two things we can do. We can either take a retracement of this entire move up to see how far price would actually retrace down to get our daily support, or we can take an extension from this as the first point down to this as the second point and back to this high here as the third point. So we shall do both of that. First off, we take the extension, 0.1 to 0.2 to 0.3. We open up all the Fibonacci ratios. And we see that this spike below here falls at the 78.6 level, right? So this is a possible key level, and it's also quite close to the Fibonacci, it's quite close to the graphical level, right? There's a graphical level here. If I were to draw a line here, you can see that price actually held below here and price actually tested here. Okay, another way of doing this is we can actually do a retracement, swing low to swing high, open up all the Fibonacci ratios. And once again, we see that this level here, this daily support, is quite close to the 88%. But one more thing to note, let me just zoom in because it can get confusing with so many levels. The two closest levels will be this area here in line with the graphical. All right, price sort of tests this level as well. So we have another level here. But more immediately, right, there's a sort of a graphical support here between the 38 and the 50. So many levels to choose. Which one would I pick? Any one of them is correct. But because of presentation purposes, I will actually choose this stronger graphical support level. Choose the 76, and I can remove this one. Right, so this will be our daily support. Now I have the daily support. What I want to do is to find the daily resistance. So we actually see that two ways of finding the resistance. One is actually a retracement of this entire move to see how far price will go up. Another way is to use this irregular zigzag to see whether price would actually form sort of a double top pattern here. So let's take the irregular zigzag. And we open up all Fibonacci ratios. And we see that the 0.5 extension is actually right there. It's not the strongest level, not the strongest Fibonacci ratio level for extension, but it falls in line with the retracement of 7640 on a longer time frame, and also in line with our weekly resistance. Now we take the Fibonacci retracement of this swing high to the swing low here, And we see once again that the weekly resistance is quite close to the 7640. So this is actually a zone, right? It's actually a zone. So it's a resistance zone. Let me just put that in. Okay. So now that we're on a daily, what I expect price to do is to make a push up to this zone, anywhere in this zone, before price makes a drop down to this graphical support level, which I will put in on the 4 hours as my intermediate support. And then price should make another push down towards the daily support. So now that we have our daily resistance, right? Daily resistance and weekly resistance, our daily support, weekly support, and our long-term resistance, we can move on down to the 4 hour to fine-tune our strategy. So on the 4 hour, we just want to focus on these levels here. The weekly support is too far away, so we can remove it for now. Let me tidy this up. Okay, tidying this up. Let me just add this zone here, a long-term resistance zone as well. Okay, so now what we want to do is focus on this area on the 4 hourly. We just check because price actually has been making lower highs, right? So let's just check whether price is actually holding below a trend line. Not the cleanest trend line because there's such a huge gap in between. So we remove this, but the fact of the matter is that price is making lower highs. Now, what I like to really see here is actually for price to push up towards the daily resistance area and then make a drop back down towards the daily support. Now recall that we actually have sort of there's a graphical support level here, right? Let me just put it as a dotted line because it's a really short-term support level. This support level here, remember we confirmed it on the daily by using a Fibonacci retracement of 50%. And one more method that we can use is use a Fibonacci extension to find that zigzag, because on the daily, it was hard to see this zigzag. You see the 0.5 is here, and the 0.6 is right there. So there's a key Fibonacci extension level. So for the trade of the day, what I'll really do is, as long as price is anywhere below my weekly resistance, right, that will be my entry. This intermediate support at 171 will be my first take profit. When price comes down here, I will close out 50% of my position, move my stop loss to break even where I entered the market, and then let the rest of the position right down to the daily support. So let me just put it in line for you so it's easier to see. This can be my sell entry with this as my first take profit and my daily support as my second take profit. Hey, this will actually give you quite a nice risk reward. Now, you're going to ask me where I'm going to put my stop loss. My stop loss will be anywhere above the weekly resistance, right? This will be my stop loss. And you ask me why I put my stop loss there. You ask me why I put my stop loss there. Now, the key thing to note is this weekly resistance. If price were to go above the weekly resistance and close above the weekly resistance, then my bearish idea is invalidated and we should see price make a further push up towards the long-term resistance. However, what markets usually do, you see this spike here. If I put my stop loss right at the weekly resistance, if I was here, I would easily be stopped out as well. So I'll put my stop loss slightly higher. Should the market go here and spike higher, there's a higher chance that it will not touch my stop loss and it may actually reverse back down. All right, guys, I hope today's trade of the day idea for Pound Cat is useful for you all. And stay safe, and we'll see you guys tomorrow.